Knowing how difficult it always is to get competent information to make great decisions, I thought it was a great opportunity at this point in time in the year to get together with one of the most respected economists in the whole of the country. In fact, one that is sought after by most of the media outlook for some sort of a view as to what the future holds for real estate. So, Nerida, Conisbee, thank you very much.
Thank you.
Really fortunate to have you.
Very kind introduction.
Oh, well, the truth is, you know the real estate market better than most. Yeah, that's an area you're really focused in on.
Certainly is.
And I know over the years we've talked a little bit about the way that real estate markets go in cycles, but of course we're also affected by a lot of one-off factors. And I'm particularly thinking right now with things like the Ukrainian war. We've got these floods that are just incredible, once in 1,000 years, they're saying now, and of course we've got an upcoming election. So how do those sort of factors, in a year that we thought, oh, thank God 2021's over, and hopefully 22 is going to be better, how do they factor into this year for real estate?
Yeah, I mean, it's complicated. It's certainly very, very different to where we were last year. I think as we were heading into 2021, everyone was pretty sure it was full steam ahead and prices were rising. We were feeling like we were out of the worst of some of the early COVID impacts on property. Right now, lots of uncertainty. The war obviously is having a big hit on oil prices.
Yeah.
Anyone filling up recently would have noticed that. That impacts inflation, that impacts interest rates. So it does put extra pressure on interest rates, which obviously affect property. We've had flooding, which is devastating many parts of northern New South Wales and southeast Queensland at the moment. So that does have an impact immediately.
About billions of dollars and many years to get back on their feet again.
Exactly, and really tough for rental markets initially.
Yeah.
You know, we know that when people are displaced, they need accommodation. Trying to find accommodation is quite difficult. But also the rebuilding process that will need to go ahead is going to be quite massive in many parts of the country. And then, of course, we also have a lot of uncertainty with COVID still. We've got interest rate uncertainty. We've got access to finance uncertainty.
So the list is getting longer.
The list is getting longer and longer in terms of what the outlook is being influenced by.
So I'll ask you, maybe in our wrap-up, what do you predict for 2022? But putting that aside for a moment, they're all going to have their own impacts. Where did you see we were in the cycle, the normal real estate cycle in any event?
Yeah, we are looking end of cycle. I mean, if you have a look around Australia as to what's been happening to prices since the start of the pandemic, overall, Australian house prices are up over 30%. If we go somewhere like Gold Coast, they're up 50%. Sydney is about to hit a $1.5 million median. We've got a reordering of regions. Gold Coast, Sunshine Coast now more expensive than Melbourne, for example. So, you know, there's this huge change that's taken place over the past 2 years. But, you know, with all the uncertainty in place, with a lot of talk of an interest rate rise, it certainly does look like things will start to slow. They are starting to slow in Melbourne and Sydney. We can see it with pricing. Elsewhere in Australia, it's still moving pretty quickly.
So if the Gold Coast has risen 50%, how does that rate us in the country? That we'd be amongst one of the sharpest rises in the country.
Yeah, it certainly is. Gold Coast, Sunshine Coast are really topping the list for bigger regional areas. We've also had some of the smaller regional areas do quite well. Mornington Peninsula, Central Coast, for example. Illawarra has done pretty well. But Gold Coast, Sunshine Coast, Brisbane as well, the whole of southeast Queensland has benefited from lots of people moving up north. So particularly from Melbourne, the highest number of people moving since the early 90s. Sydney as well, but also a lot of money. So I think, you know, in many places we have seen this resetting of pricing because people in Sydney look at $1 million and can't buy much and head to Gold Coast and increasingly can't buy much, but, you know, can certainly get a better home for their money in that region.
So knowing that the markets go in cycles, what would you be looking for now? What sort of signposts are you looking for to give you sort of a feel for how the market's progressing?
Yeah, so I guess pricing is a big one. You know, we get monthly pricing indices from different groups. CoreLogic is a major one. We also do pricing models ourselves, so we look pretty closely at that. And then I guess general demand characteristics. So a big one for us is obviously auctions. We do more auctions than any other group. We get a lot of detail on active bidders. And so what we have found is that active bidding per auction is starting to slow down a little bit. It's not crashing or anything, but we can certainly see that the number of people who are putting their hand up at auction is starting to reduce a little bit. So it does suggest that things are starting to slow. Southeast Queensland's a little bit different. We're not seeing the same sort of characteristics as we're seeing in Sydney and Melbourne yet, but we certainly know that the rest of Australia will start to slow this year with a lot of the uncertainty taking place.
Do you watch things like the economy and say unemployment and maybe population growth? Are those things that you feel will come into play this year?
Yeah, absolutely. And I guess they're the big ones, the long-term movers, particularly population growth. And I think one of the interesting ones for Southeast Queensland was that it has been such a star performer in terms of attracting people. Yeah. So international borders will also help that. And then the economy. I mean, on one hand, we do have talk of an interest rate rise. We'll probably see, or quite possibly see an interest rate rise this year. But at the same time, the economy is moving very quickly. Unemployment's pushing below 4%. So, we've got these two opposing forces, which, rising interest rates, but a red hot economy, which is, will in some ways balance the market a little bit.
So, is that a forecast for interest rate rises?
Well, pretty much. I think the thing is we know inflation is rising and the pressure on inflation is getting worse with oil prices, back to the Ukraine. We know construction costs are getting quite out of control at the moment, so that's also pushing up the cost of new housing. So housing costs are going up, fuel costs are going up, inflation hopefully will come down soon, but if it doesn't, then we will be hit with an earlier than expected interest rate rise. I think it will be before the 2023 date set by the Reserve Bank, but things can change pretty quickly, and if inflation does slow down, they may not have to move as quickly.
Yeah, and that's, I guess, with the consequence of virtually no population growth through immigration. We're starting to see the skills shortage. We're seeing wages going up, which goes into inflation, all prices and delivery costs, inflation, so it'd be hard to avoid an interest rate rise?
Yeah, I think so. And you're right. Particularly things like hospitality and construction and transport, all of those things are really being hit by skill shortages. And at the moment, we are seeing international migration coming back, but it will take some time to get enough people to fill all those vacant roles.
Yeah. So would we expect substantial interest rate? Because that's what concerns everyone. Is it going up 0.5%? Is it going up 2%? How much is it going up?
Well, look, at this stage, hopefully not a 2% rise. I think obviously households have, not obviously, but we know households have saved a lot of money through the pandemic. We've seen it through ABS data and through deposit information that we get from banks. So people have saved a lot. They are well placed to handle, maybe 1, 2, 3 interest rate rises, but if we did see a lot, then it could get quite stressful. So, we're certainly not in that category just yet. So I think the thing is, maybe 1 or 2 rate rises over the next 12 months.
0.5% each?
Maybe. We don't know. I mean, this is the thing, even whether there'll be a rate rise, at this point it does look like it, but if inflation is transitory like the Reserve Bank are hoping, then it may not, they may be pushed out a little bit further. So, I would be looking at fixing my rate, I guess, fixing my home loan rate. So I think, I suppose as a consumer or as someone that holds a home loan, be mindful of the fact that interest rates are rising, be prepared, make sure you've got enough money in there, and then also talk to a mortgage broker and just make sure you've got the best deal for your home loan.
So you've got this conflicting information. One is about record savings, yet record mortgage stress. So how do they not sort of counter each other? Why is two significant factors? Record savings, which you'd say, well, people should be able to be in a comfortable position, yet there's record household stress.
Yeah, I mean, they're different people. I think that's fundamentally the issue, that we know that younger people do get hit by mortgage stress. They've typically taken a bigger home loan relative to the amount of money that they earn. They're in the early stages of their career. I guess the thing with mortgage stress is that we're not seeing it as a widespread problem at this point. And so, although it is tempting to talk about, averages and say it's not a problem, but, we do know that some people are really getting hit. I think the people too that are getting hit are those that have really been in COVID-affected jobs. So anyone who has been in hospitality, for example, anyone who's, not owns gyms, anything that hasn't been able to operate properly through the pandemic would be feeling very different to a white collar worker who's been able to work from home and really hasn't had much disruption to their income.
Just before we move to a closer look of the Gold Coast, the election, obviously one that there's opinion polls would say probably a change of government. How do you think that'll affect the real estate market?
Yeah, it'll be interesting. I mean, we're not hearing any policies at the moment, so it is hard to tell exactly what will be the key policy issues. I think the big one will be affordability. With house prices having increased so much over the past 2 years, it is stressing a lot of people out. We've also seen quite significant increases in rents as well.
Yep.
So in some markets, and Southeast Queensland is one of them, that they have shot up a lot and are really impacting people's ability to pay. So I think affordability will be the big one, but at this point, we just
no
don't
silver
know.
bullet for that, is there?
No, it's very complex. I mean, we could talk for another 20
could.
minutes on affordability and solving that, but it is certainly a very complicated issue, and complicated in areas which are restricted to the amount of housing supply that can be produced. So, I think, Byron Bay is such a good example because it is an area that people don't want building, but at the same time, it does have a big affordability issue. Gold Coast, less so, but certainly an area that is restricted for development, particularly new houses as opposed to apartments. So, a lot of change that will have to take place to allow that market to continue to be more affordable.
Okay, as we move to the Gold Coast, maybe we can look at a couple of segments. Apartment markets. What do you see happening there?
Yeah, apartments are doing well. We can see that prices have moved pretty quickly across the region. And what is interesting is it does seem to be more expensive apartments that are doing well, and some of the cheaper ones are not doing as well, which is quite different. I mean, you obviously have been in the Gold Coast market for a very long time, but it has historically been such a holiday market location, but what people have been buying, or certainly what we're seeing through pricing, is that some of the more expensive ones are moving up quite quickly.
Well, what I found remarkable is with this higher income migration that we're seeing, that much of the rental accommodation has now been sold off in suburbs like Surfers Paradise, and you're seeing buildings that used to be predominantly holiday let are now becoming predominantly owner occupied. It's changing the whole face, and of course the average price in Surfers in particular has really risen. So strong demand for the rental market, strong demand for owner occupiers means that segment, the unit market, will continue with a good deal of strength whilst ever migration continues. Yeah,
look, it certainly is a change in the way that people are buying. As you said, once you start to see a lot of holiday apartments become areas that people live in, it does change the demographic of the area, and people living there spend more money in the economy, and they're working in the economy, and then so it does have this this flow-on effect to what happens in the economy. So I think it's good news, but it does mean that apartments are becoming far more expensive than they used to be.
Yeah. So now the housing market, strictly houses, and I'll break that into, say, prestige and just general housing. General housing, how do you see that for the Gold Coast?
Yeah, I mean, prices have gone up 50% since the start of the pandemic. So we do have a median over $1 million now. You've got Mermaid Beach, Surfers Paradise, Main Beach, all sitting at a median over $2 million. Really pushing up. So, overall the market is doing incredibly well, and it is showing up in pricing. Pricing is becoming more Sydney-like. It's not exactly Sydney-like, but it is becoming more so than it has been in the past.
Does that become more challenging now when you start to see a medium that's so much higher? Does that mean it's really going to put the brakes on further growth?
Well, I think it's challenging for people that live there because, obviously when you live in a market, you look historically and think, well, the market did this 3 weeks ago, it should be doing this now, whereas people from Melbourne and Sydney are coming in and looking at it as being, well, I bought something similar in Melbourne for this price, so that looks like a bargain to me. So, there's this problems with this adjustment that's taking place. As to whether it will continue, I think, I can't see Gold Coast going down 50%. I think probably what will happen is the market will slow in terms of price growth, and pretty consistently with what we're seeing in Melbourne, Sydney now, that you just can't continue with a 50% price growth over 2 years without some, pretty alarming impacts on people and also on the market.
Prestige properties, they've been really spectacular on the coast.
They have.
It was only a couple of years ago, 2 years ago, we rarely hear of something selling over $5 million. Now it's a weekly event.
Yeah, it's quite normal. Well, it's interesting. We had a look at the most expensive streets in Queensland a couple of weeks ago, and Hedges Avenue sits there at number one, which is apparently a beautiful street. And Prestige is doing well on the Gold. I mean, there is a lot of prestige on the Gold Coast. There's a lot of beautiful places, and again, what people can buy in other bigger, more established cities and comparing it to what they can get on the Gold Coast, it certainly is a lot more beautiful.
And we don't talk often about commercial. How do you see commercial on the coast?
Yeah, commercial's doing well. It's interesting looking at office markets, and Gold Coast office market isn't doing as badly as some other markets because, there's this population growth pressure that's taking place. Obviously, office is quite a challenged sector because people are working differently now. So, it is a little bit uncertain as to the tenant side, but investors love it. So when we're seeing no slowdown in the amount of money but targeting it. Industrial just continues to be number one.
Powerhouse.
Powerhouse. Everyone loves industrial. It is the property type of, the century even, I would call it. And then shopping centres are really interesting. I mean, we did see a big sale. Big regional shopping centres. We did see the big sale of Pacific Fair, a part sale, which was a great price, particularly at a time people are very uncertain about retail. And
shows real confidence in the coast too, doesn't it?
Shows confidence, beautiful centre. But I think what's interesting too, we saw online retailing dip down more, and so it does show that people are getting out and about, getting back to the shops. What's interesting too is the type of retailing that's doing well. Luxury is doing well. We know that the top end of retail, people are still shopping there, and also regional centres, people are returning, which they were one sector of the market that really did struggle early on.
Yep. So 2022. As I said at the beginning, we sort of thought it was a year of a lot of promise. We got some of these dramas, COVID behind us and so on. Oh, surely we can get a more stable year going forward. Wow. If you try to apply some sort of analysis of what's likely to happen, what do you think?
It's highly uncertain. I think one of the things we can say for sure, the market won't move as quickly this year as it did last year. There's one thing I will say with certainty. In terms of then the nuances between markets and the rates of growth, certainly we can see that rental demand will be quite strong this year because we are seeing international migration starting up again. A lot of those apartment markets close to universities will do well again. They're ones that really have struggled as we've moved through the pandemic and had a lack of foreign students.
We at the pre-COVID we would get between 3,000 and 3,500 rental inquiries a month. At our peak, and we're just off that, we were getting 14,500, and shows the demand there is for real estate, or for rental properties on the Gold Coast in particular.
Incredible.
Yeah, incredible.
Well, incredible too now that students are returning, so I'd imagine that's going to
go up.
It will only go up, Yeah, so rental demand's strong. I think luxury is still going to do okay. I mean, it'll probably get hit a little bit with a sentiment shift that's taken place, but there's no shortage of money. The economy's growing. We're going to see international investors come back. So all of those things will really keep the market going. And then interest rate rise. Obviously, things slow down quite a bit, depending on how much they increase, as we spoke about before. But it certainly will have a calming effect on the market, and could turn into price declines if they do shoot up too quickly, too soon.
So we've got some counterbalancing sort of factors. We've got an election coming up, which I've always found sort of takes a bit of the market away. People are going, oh, let's wait and see what happens. And and if there's a change, then it's, oh my God, the world's going to change. What's going to go on here? A couple of interest rate rises maybe. Neither of those are really positive for real estate. Yet we've still got some strength in the economy. Is there a chance of an X factor? We had Lehman Brothers collapsing back in 2008 that changed the world as we knew it. Do you see any of those? Could it be Europe getting into bigger conflict, or do you see anything maybe in the national or the international front with money supply?
Yeah, I mean, you can go down a dark hole pretty quickly when you go there. Certainly, the Ukraine and Russia conflict at the moment is very stressful. It's more stressful for Europe, obviously, because they're a lot closer. They're also influenced a lot by very rapid rises in fuel costs, so that's impacting them more than us. Beyond that, I guess with China, what will happen there? Still very uncertain. I guess rapid rises in interest rates overseas, which are starting to happen, could have a flow-on impact. So, I guess, I don't know exactly what the X factor will be, but there are certainly risks on the horizon, and global risks, which are not COVID anymore. There are other things that have come out of over the past 2 years.
Yeah. So, if I was thinking of selling, what would you say to me?
Yeah, always good time to sell. I mean, we are close to peak, you know, so I think if you are someone that is wanting to cash in, and one of the things that has been quite evident through the pandemic is that a lot of older people have sold and decided to buy a regional property and in an urban property. So, you know, that I think that was a really good strategy that a lot of people undertook. But certainly now, you know, it is a good time to sell because, you know, we know for sure the pricing won't move as quickly this year as it did last year. So if you're wanting to be close to peak, you know, you are pretty close to it. And then I guess always picking timing cycles, you know, it's so hard at the best of times, even with the best information. And as you said, something, you know, quite unusual could come in and really make such a difference to the outlook.
It is usual after a peak, after a sharp rise. There usually is a correction. But that's, from my past experience, would be usually a 10 or 15% price correction. In a normal cycle, and it's a lot more if it's you know, an X factor or something severe. So I guess that's just playing the cycles and knowing that it doesn't sort of go up and stop there and then go up again.
Yeah.
It goes up and there is a price correction.
Yeah, and I think it does depend on the market too. You know, we do find markets like Perth that are a little bit more boom bust.
We used to be there.
Gold Coast used to be there, yeah, and I think it has changed. I mean, you know, going back to the fact that you've got more permanent residents there, and you know, people. It's a more self-fulfilling economy as opposed to relying on bigger cities and not relying so much on tourism. So I don't think Gold Coast will be showing that same, you know, sort of boom bust cycle it has in the past, but as you said, you know, prices have risen at such a dramatic rate that you know, whether they come off a bit or they remain pretty flat for quite some time, you know, it is quite likely over the next couple of years.
Now I know you're in huge demand around the country, but I think it's time you came up to the Gold Coast and did a bit of a, you know, touch and feel and get a real good feel for it. So I've got a couple of ideas on that front, and I know that our clients will very much value hearing your latest. So stay tuned. I'm going to ask Nerida to come up, and we'll make sure you've got the opportunity of joining in and hearing the latest, because it's going to be a fascinating year. I'm sure of that. It's going to be fascinating. So thank you very much for your time today. I really appreciate it.
Pleasure.
And I look forward to seeing you on the coast not too soon.
Looking forward to it.
Not too far away. Okay, all the best. Thank you.
Thank you.